Let's analysis once again for the next day. That's October 17th, tomorrow, 2024. So this is what primarily we'll be looking at. Let's get into the charts. Here we have the Nifty 50 charts that clearly indicates it's a down day. The candle is a small body. Small bodies are indecisive, right? The wick size is equal on both, but it's a small body, and that's the charts of Nifty 50 that you're seeing. Banknifty, it's even more bearish because of the fact that it's a gravestone doji. Small bodies are indecisive. This is a gravestone doji, very small body, and it's even more indecisive. So, and look at where it has become indecisive. It is at a major resistance zone at the 52,000. That's where the 20 expansion moving average is there, and look at where this has feeding the heat. It's at the same point, 20 expansion moving average. So, if you look at the Bollinger Bands, Nifty, it is consolidating, but you see that there is an expansion that is slightly bigger, which indicates the bearish bias is increasing. But for Banknifty, so that expansion has not really started, so it's consolidation sideways, but again bearish bias because it's below the median of the Bollinger Bands. So most things remain the same, except that it looks like probably it's trying to make a head and shoulder on the daily time frames and retest the previous swing lows, at the same time making a lower low in the lower high lower low price action pattern. That's what probably it's heading towards. So this, let's look at the support resistance levels. The first resistance would be this, would be that in the Nifty it's going to be the 25,225, where you have the 20 expansion moving average, and after that 25,432, where you have the 20 moving average. It's a median of the Bollinger Band. So if that is clear, then 25,740, where the gap is the previous gap that would act as a major resistance, and that's the levels for the Nifty for the next day. And supports, the major support is going to come at the previous swing lows at 24,600, so 24,700 nearby. Right, market is right now at 25,970. It's very close. So a breach of that would take it to the Fibonacci 38 retracement levels, and also a previous resistance zone, which, and also is confluencing with the 100 exponential moving average zone at 24,500 nearby. 24,455, 24,500, right? That's the zone. So this is the zone where the major support is going to come in, and if that is breached, then it can fall to the 24,000 big grounding number. That may take a couple of days more if it also happens. So that's the supports on the downside. Banknifty, on the other hand, it attempted to clear and move above the 20 expansion moving average, didn't work out. So clearing that 52,000 is crucial because it is confluence of a previous resistance zone as well as 20 expansion moving average, and clearing that with a solid green candle is very important. Right. After that, 52,500 would be the next resistance because it's a median of the Bollinger Bands, and the major resistance at 52,820 comes in where the gap is that window gap. Right. Once you, that's also the neckline is coming very close at 53,000, 52,350. That's a neckline of the cup pattern. So if that also would act as a major resistance on the journey upwards. So downside, the first support would come in at 51,000. There is a 100 exponential average that is coming there. If that is breached, a retest of the previous swing lows at 50,250, that zone will come. So it's a previous swing lows, and if that is breached, then we may have trouble because the next support is set to 49,238. That is a 200 exponential moving average. Breach of that could be dangerous. So 200 exponential moving average is confluence with the 61 Fibonacci retracement, which is also very crucial. A breach of that on the downside. So hopefully it may find some support in the 200 and the 61.8 Fibonacci retracement. That zones at the 49,300. That zones. So that's what we can hope for. That's a long way. That may not happen next day. So that's about support resistances. And then if you look at the momentum, right, the momentum of the Nifty has been sideways after having gone to the bear zones. It has climbed back on the short term and then hovering near that RSI 40 level. So it's at a support. It's sideways consolidation, absolutely from the middle side. Trend, on the other hand, has not crossed over, but the bearishness of the trend, just being day and night is strength of that is reducing. It's like Banknifty the same. It's been the sideways and it is attempted to move above, but no, it's being pushed down. It's meeting the resistance, and sideways movement is what you see with the bearish bias in the momentum as well. Trend also, the bearish is reducing as of now, negative trend on the short. So that's what momentum and trend. What about the volatility? It's measured with the VIX and Bollinger Bands also. Bollinger Band, we have seen how it's behaving, but it's flattish. India VIX at 13 itself for self. So VIX is not moving at all. Probably it is waiting for an event, waiting for some kind of event, steward negative, to do something on the upside or outside. But it's not bearish bias is what it shows. It's just waiting. It's indecisive. It's not doing anything. Now, how do the market participants different in the sectoral indices do? If you look at that, you see that except the reality, all of them did bad. IT and auto lost 1% nearly. Those are the bad performers. So Nifty IT is consolidating at the very top, feeling the pressure, and metal indecisive, flattish, but auto lost more than 1%. Right. So auto and IT got hit badly today. Pharma flat. FMCG had gone to the bear zones. The only sector that has gone to the bear zones with respect to the momentum on the short term. So heavyweight stocks, if you see HDFC Bank and Reliance recovered slightly. HDFC Bank is doing good. It's trying to move up after the retracement. After the retracement of probably 200 points or something, it's trying to move up steadily, and it is doing okay with the 1%. And Reliance also, after a correction of very good correction of 14% or some 15% something, it is trying to come back. It's at a major support zone of 22,600. That's a major support zone for the Reliance, and could be a buying opportunity for long-term investors. That's following the result that didn't work out well for this quarter, I think. ICICI Bank, yeah. So otherwise, what got badly hit was Infosys and the Kodak Bank. Infosys and IT sector, it's feeling the pressure. It's a very all-time high nearby. It's slipped sideways on the short term. And that's what heavyweights did today. And mid cap, small cap also was kind of flattish, absolute flattish move, and no extended correction, no breakout in the upside. None of this has happened today. If you look at what has happened today, it's all bearish among the banking index, and it's again bearish. So no big greens are seen except for some small greens in HDFC Life and all that. Otherwise, all of that. So it's a red day, bearish bias day. And what else do we see? So tomorrow you have the expiry. So before that, the FIs have been selling like anything. I think over 65,000 or something. It's a selling that you had seen the last 2 weeks alone. And this is following the China revival plan, something fundamentally say that the money, the FIs is getting shifted to the Chinese market. But this is too bad to have the FIs consistently selling. And it is the DIS which is consistently buying, and that's the only reason why market is not correcting 10-15% mutual fund money. Tomorrow is a Nifty expire, so look at the levels. It's bearish bias because it's a PCR is 0.55 with respect to options. With respect to the futures OI, it's negative bearish bias. Short build-up is what happened today. So the options for tomorrow's expiry, Nifty is bearish bias, and the levels that it's showing is 25,000 and 24,000, a very wide range, 1,000 points range. Yeah, given the fact that it doesn't give any much clue as to which side. No, but let's look at the charts. So that's the levels. And to sum it up, market is consolidating since last 7 days. It's doing nothing but just hovering around the 25,000 itself, and it's been volatile. It is indecisive, so stay cautious and have that stop loss if you're playing the game. Right? So normally after the consolidation, it can be a big breakout, but how long does that breakout need to wait, or how long does the consolidation have to happen is not in our hands. It's very difficult to predict that. So stay cautious, have your hedges, and have your stop losses. That's all we can do. Thanks for watching. Happy trading, happy learning, happy investing. Bye bye.